Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the NDX, which is the cash market for the Nasdaq 100, and we're going to be following our new format for the channel, which is our Elliott wave count first and our basic technical analysis second. So without further ado, let's get into the count. We're on the daily time frame here on our arithmetic scale and we're tracking this fifth primary wave degree move up, like so. Inside of that fifth wave we have 5 intermediate waves like this inside of this channel. 1, 2, 3, 4, 5. There is no overlap if you come in and check carefully, so it is a legal impulse wave, and we're basically going 1 to 3 to find the 5. There are intermediate waves. So now if we come down inside of our fifth intermediate wave into the most recent price action and give you an update of what's going on. 2-hour time frame, and let's have a look. So inside of our fifth intermediate wave there are of course 5 minor waves, and so far I've got it set up projected to look like this. We are in minor wave 3, not quite complete yet I don't think, very close to doing so. Then we'll have a minor wave 4 correction, and then we'll push up into this fifth minor wave of the fifth intermediate wave of the fifth primary wave of the fifth cycle wave of what has been over a 12-year long bull market. The market will peak during the summer, it's my opinion, and then unravel into the gigantic bear market. But we're not there yet, and there's a considerable amount of price action potentially left. So let's have a look at a couple of these targets. The first one I want to discuss here is the minor wave 3 target. Now all I've done here is taken the wave 1 with our fib extension tool, come to the bottom of wave 2 and project the 1.618 extension for the wave 3. I've chosen this extension purely because we've already gone through parity at 100 and we've gone through the 123.6. I've got the 1318 here. This could potentially cause resistance, but given the way this is counting so far, I don't see any way of counting a 5-wave move up to here. I think we need a bit more room to get 5 waves up, and that's going to give the space we need to get to the 1618. So that's my first projection, that we are in 1, 2, minor wave 3 will top somewhere around the 1.618, then we'll waste some time in wave 4. We had a flat pattern in wave 2, so an alternative pattern in wave 4 like a zigzag, where you tend to get one in wave 2, you tend to get the other in wave 4 and vice versa, but it could also be a triangle, which is a legitimate pattern for a wave 4, but when it is complete we'll get that final thrust up in a fifth towards the top of the channel. Doesn't have to go this high, legally it only has to clear the wave 3, it could even be a truncated fifth and complete below, but we will determine that as and when we see the wave structure start to move up once that wave 4 completes. All I've done to project the wave 4 is taken the 1.618 target of the wave 3 and measuring from the 2 to the 3 using a Fibonacci retracement. I'm simply projecting somewhere between the 23.6 and the 38.2, which are typical retracements for a wave 4, and just leaving it hanging around somewhere in the middle for the moment. Right then, there is one other interesting target we have here, which is this yellow line at 14191.77. This is the 61.8% projection of waves 1 and 3 from the 4 at both intermediate and primary degree. So if I show you what I mean quickly, it's quite an interesting little fib confluence here if I'm honest. So it could potentially be a top, although the wave structure doesn't support it at the moment. It is potentially a top. So we come up and take the whole of the 1 and the 3 on the intermediate time frame and project from the 4, and here's our yellow line here at 14187.55. Now what's also interesting, that was intermediate wave degree. If we come out a little bit further and we go and find the bottom in March last year in 2020, and then we drag all the way up from the bottom in March to the top of the 3, so taking our 1 and our 3 and we project from our 4. What we find is a perfect overlap at 61.8%. 14202 I make here, but it is basically in the exact same place. I may not got it perfect here, but if you see, if we zoom back in into this area here, you can see how the yellow line overlaps exactly. Now, That's quite interesting. I'm not saying it's necessarily we have to top here and collapse, but we would be clear of intermediate wave 3 with an intermediate wave 4, so we would legally be able to complete up here having cleared the wave 3. This could be a wave 5 completing up here on intermediate time degree, and then this could be the top of the market, possibly. Either way we should observe it, because maybe it's actually the target for our minor wave 3, and we simply have a temporary rejection up here. But interesting that both primary and intermediate degree 61.8% extensions of the wave 1 and 3 together, projected from their respective 4s, both meet exactly here. Just an interesting conference, so keep your eyes on that level next week. 14,191.77. If we get a violent reaction from there, we need to look at whether we're on minor wave degree going into a 4 or potentially a top for the market. Now, we won't be sure unless we see an invalidation of minor wave 4. So this would be the top of the wave 1. Now you could get quite a deep wave 4, which comes down somewhere to here before going back up, but we can't go beyond this point. Okay, we can't go beyond this point here at 13,296.30. If we were to top at this 61.8% confluence here and then break down out of this channel and take out the invalidation point for minor wave 4, that would be a pretty strong sign that the market's topped or a major wave degree has completed up here, and we would have to reconsider what's going on. But in the meantime, things still look bullish. So that's how I see the Elliott wave count for the moment. Probably a pop up into early next week, and then we'll start our consolidation to minor wave 4 before that final move up to the highs. That doesn't have to make it to the top of the channel, but it could. Right then guys, that's our Elliott wave count. So let's move over to our basic technical analysis to complete the video. We're just going to hide the Elliott wave count for the moment. We're going to go out to the weekly time frame. Zoom in a little bit. We're going to bring up our moving averages here. Now we're on the weekly time frame, just hide our favourites bar for the moment. We have 4 exponential moving averages on the chart here. 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. We have no volume profile set up here. I think I have tried to put one up before on the NDX. Let me just double check whether I've neglected to do it or whether we can't get it. I think it's a case of data is not provided by the vendor. Yes, it is. So we have to live without that. This is one of the reasons why we occasionally use the NQ1, the futures, mini futures specifically, so that we can get that volume profile. But we haven't got it here, and I wanted to take a look at the cash market. So without further ado, let's have a look at where we are. We're above the 10, 20, 60, 250 exponential moving averages on the weekly time frame, looking very, very bullish. 4 green candles in a row. Last week's candle taking us to a new high. We have the RSI. We're not quite overbought yet. We do have a prolonged bearish divergence going all the way back to the 24th of August high here. Then we have a high here at the 4th of January. Then we have a high that we did last week at the 12th of April. And it's a series of high, lower high, lower high, while we have high, higher high, and higher high in price. So this bearish divergence continues to build up. This supports the idea that momentum peaked in wave 3 here. 3, 4, or sorry, 3, 4. 3, 4, and then we've been working up in a wave 5 ever since. The MACD has us just recording a green bar for the week on the histogram here. Bullish crossover pretty much about to occur. This could be enough to just take us up and over into that wave 3, then we start to pull back for a moment in wave 4, then we turn green and start to build up some serious momentum for that final push up. However, we can see the same bearish divergence on the weekly time frame between the high on the 24th of August in the MACD here and the high around the 16th of February here in the MACD. We see a high and a lower high, high and higher high in price. If we were to get that 5th and final peak up and have another lower high here on the MACD, same as in the RSI, that would continue that long-term bearish divergence and probably signal the top. If that were to happen around the projected period, mid to late May, I would take that probably as the top of the market, especially if we saw a violent reaction from there. Let's come down to the daily time frame. Above the 10, 20, 60 and 250, of course. Recently have gone back into overbought territory, have pulled back a little bit since, forming a new high on price for the end of the week on the Friday, and actually having a slightly bearish divergence from on the day time frame from high to lower high on the RSI. Very small though. We see we're well positive here on the MACD, well into positive territory, but we can see the short-term moving average starting to roll over towards the long-term moving average. Hasn't crossed over yet. Some of that bullish momentum is starting to die off. Smaller bars here on the histogram, but this could literally just be that peaking period into the minor 3 before we roll over into the 4 and then finally push up into the 5. Still looking bullish as hell across the board. Doesn't matter what time frame you look at it. We are so far away from our long-term moving averages on both a daily and weekly time frame that any correction which brings us back to them is going to be pretty extreme, especially on the weekly time frame, and it's been a long time since we've done it, so something to look out for. Right then, if you're new to the channel and you've enjoyed this video, please subscribe, smash the like, leave us a comment in the comment section below and let us know what you think if you care to. Hit the bell notification icon to remain informed of future video releases. And before I go, I just want to thank my patrons again. Greatly appreciate your support, having a lot of fun chatting away with you on the Discord and sharing trading ideas and trade setups. If you're not a Patreon yet, please follow the link to the Patreon in the description below. Have a read of the tiers, see if there's anything you like. There's lots of great benefits there, and if you want to sign up, you'd be most welcome. Also, I have a Twitter feed. If you're not following me yet, there'll be a link in the description below, and you can go and follow my Twitter as well. Alright guys, take care, and I'll be back with you soon. All the best. Bye bye.